Hi everyone. Welcome to Level Up channel. Would you like to invest in high-quality dividend stocks? What about stocks that have a dividend yield of at least 5%, that pay dividends for at least 20 years now, and that have secured dividend scores of at least 60? Now, let's get into the list. Stock 1, Leggett and Platt. Dividend yield, 5%. Dividend safety, 70. Dividend growth, 4% per year in the last 5 years. Dividend growth streak, 50 years. Leggett has managed to greatly expand its business over time despite using a conservative operating style. Almost all of the company's sales in 1960 came from the selling of bedding components. The fact that bedding accounts for roughly half of Leggett's current income highlights the company's development into neighboring markets during the past 60-plus years. Leggett should have a long runway to continue paying consistently increasing dividends given its BBB investment-grade credit rating, sustained profitability, and careful capital deployment. Stock 2, Enbridge. Dividend yield, 6.67%. Dividend safety, 70. Dividend growth, 10% per year in the last 5 years. Dividend growth streak, 26 years. Energy-related long-term forecasts are fraught with uncertainty. Given their significance to growing markets, fossil fuels may continue to play a significant role in the global energy mix, creating a long-term need for Enbridge's infrastructure. Enbridge has established itself as one of North America's best-run midstream businesses overall. Contrarian income investors who trust in the durability of fossil fuels and the midstream assets that let them transition from energy producers to consumers may find the company to their liking. Stock 3, W.P. Carey. Dividend yield, 5.39%. Dividend safety, 73. Dividend growth, 1% per year in the last 5 years. Dividend growth streak, 23 years. With a BBB credit rating, W.P. Carey has avoided taking on too much debt or setting itself up for aggressive growth goals. As a result, the REIT may weather economic downturns without becoming unduly dependent on capital market access. W.P. Carey has grown its dividend each year since coming public in 1998 as a result of these characteristics, and it is likely to keep doing so in the future. Stock 4, Enterprise Product Partners. Dividend yield, 7.98%. Dividend safety, 65. Dividend growth, 2% per year in the last 5 years. Dividend growth streak, 23 years. Specialists anticipate constant fossil fuel demand with a slow rate of decline over the long run. This should increase the value of Enterprise's midstream infrastructure, but investors need to be aware of how the oil sector is changing. Due to its solid balance sheet, easy access to low-cost capital, low-risk self-funding business model, and conservative management team, Enterprise Products Partners appears to be one of the lower-risk options in the midstream energy industry overall. Stock 5, TC Energy. Dividend yield, 6.32%. Dividend safety, 61. Dividend growth, 9% per year in the last 5 years. Dividend growth streak, 21 years. TC Energy, formerly known as TransCanada, was established in 1951 in order to build a pipeline across Canada to transport natural gas from where it was produced in large quantities in the west to where it was needed by the nation's rapidly expanding population in the east. This cross-country pipeline is still in use today, and TC Energy's extensive energy infrastructure now spans North America and totals more than $100 billion in assets. Stock 6, Magellan Midstream's Partners. Dividend yield, 8.64%. Dividend safety, 61. Dividend growth, 4% per year in the last 5 years. Dividend growth streak, 20 years. Looking ahead, some investors are concerned that the market for fossil fuels could peak sooner than most energy executives anticipate due to the growing global push to decrease carbon emissions and embrace renewable energy. On the commercial side of refined products, a switch to electric vehicles and improved fuel efficiency may have an impact on the long-term demand for transportation fuel. Additionally, a continued drop in oil prices could reduce pipeline utilization in the basins that Magellan services. These elements might reduce the volume that Magellan's infrastructure transports and stores as well as the prices it can charge for contract extensions. Stock 7, Telus. Dividend yield, 4.97%. Dividend safety, 72. Dividend growth, 7% per year in the last 5 years. Dividend growth streak, 18 years. While periods of infrastructure development will place greater demands on cash flow, management is committed to growing the dividend over time. This support is made possible by Telus's stable and recurring cash flow, as well as the financial flexibility provided by its BBB+ investment-grade credit rating. The firm is likely to continue its dividend growth streak that started in 2004, albeit at a slower pace while continuing its 5G and fiber optic cable expansion. Stock 8, Verizon. Dividend Yield, 6.97%. Dividend Safety, 87. Dividend Growth, 2% per year in the last 5 years. Dividend Growth Streak, 16 years. Does Verizon, all things considered, present a purchasing opportunity at the current price? In fact, competition in the wireless mobile sector is growing. Additionally, there is a danger of aging debt, which the business would probably need to refinance at a higher rate. Although the company is currently trading at a 12-year low, I don't believe that Verizon's fundamentals are considerably worse than they were a few years ago. Thanks to its C-band installations, Verizon is overtaking Telus, and its upselling approach for subscribers is bearing fruit. Additionally, the firm's aggressive holiday marketing may change the pattern of net postpaid phone loss. The company also routinely earns cash, has a respectable ROE, and trades at a favorable valuation. Additionally, the fixed wireless broadband industry and the enterprise sector continue to drive its expansion. In conclusion, I think that $36 per share is a solid starting point. Please feel free to leave a remark if you have any different ideas. Stock 9, Realty Income. Dividend Yield, 4.71%. Dividend Safety, 70. Dividend Growth, 3% per year in the last 5 years. Dividend Growth Streak, 27 years. Many analysts see a nice upside potential for the stock. Bank of America sees the stock at $79, which represents a 22% upside. Many others agree with almost the same price targets. This is it. Remember, I am not a financial advisor. Don't forget to make your own due diligence before investing. I hope the list helps add some companies to your watch list and maybe portfolio. I personally try to invest in companies that have good records of dividends payments. Please push the like button if you like the video and subscribe to the channel for similar content. I'll see you next time.